So in my efforts to provide everyone, men, and also my increasing listener base now has a lot more women listening, with the absolute best information possible, there was a new China story today. And no, I am not a China basher. I go wherever the information goes. Wherever the information goes. Good or bad. Good or bad for the US. Good or bad for the European Union. Good or bad for Japan. Good or bad for emerging markets. Good or bad for any other country, including China. The gold community just does not want to hear it. In fact, yesterday, there was, I think, a disciple of Peter Schiff. He may have even been a stockbroker at Euro Pacific Capital who attacked me relentlessly on Facebook, accusing me after repeating all talking points from Peter Schiff on China verbatim that Peter Schiff has been repeating for the last 10 years. He even accused me of taking money directly from Kyle Bass to spread lies about China. Yes, this guy did. That's how ridiculous the gold community is. That is how ridiculous the narrative is. It is unbelievable. They do their confirmation bias. They do not want to hear. This guy also lives in the United States. He lives in Florida, lives in, I think, the Fort Lauderdale area. So that's around where a Euro Pacific Capital branch is, repeating everything Peter Schiff says. And he is buying gold and rooting for China to collapse the U.S. So he's making his money here in the U.S., living here in the U.S., and rooting for the U.S. to collapse. So gold will go to $10,000 from China because of China, and he will get rich. Meanwhile, the truth is the exact opposite. So all these governments are in trouble. China is no better now than economically than the US or the European Union. Yes, I appreciate you telling other people to smash the like button. Here's the story, guys. This is a very serious story because this hedge fund manager from Hedgeye, Darius Dale, he used to manage a lot of money, and he also is top global macro research for Hedgeye along with Keith McCullough. He just put this on his Twitter earlier today. He says, "This is the first thing I've read that says Beijing is officially panicking. Quote, if a parent wishes to pay school expenses for a student studying abroad, an acceptance letter must be presented to start to get money out of the country." This was a common trick for many, many years, how more affluent families in mainland China would get their savings out of RMB and out of China. And I think that's why the dollar is rallying. I believe the dollar index at one point touched 99 today, intraday. It is now currently at, let me pull this up, it is now at 98.83. So it's up 0.33%. So, but it was up more because the dollar index hasn't really held 98. So here's the story. This story is from the Nikkei Asian Review. You can read it yourself for free. I think they offer a few articles for free per month. It's from Yusho Cho, the Nikkei staff writer. It came out today, and it's China clamps down on capital flight risk as the yuan weakens. So capital controls are very common to China. However, you will see in this article that China is becoming increasingly more desperate, increasingly more strict with the capital controls. They are targeting all the ways that Chinese families in mainland China, the more affluent ones, used to get capital out. So let me continue with the article. Banks and real estate developers press to keep funds within the borders. Okay? If China was in great shape, guys, if China was going to crash the dollar, if China's economy really was growing at a still strong growth rate of 6.2%, China would not be doing these measures. Okay, here we go. As China allows the yuan to depreciate to a level not seen in 11 years, financial authorities have rolled out measures to stem capital outflows from the mainland. Again, if China was in great shape economically, they would not need to do this. The new rules include stricter oversight of banks in times of capital flight and restrictions on real estate developers' access to foreign currency bonds. So for those of you who are not familiar with what this means, China is trying to stop all the real estate developers inside China from borrowing dollars, from borrowing dollar-denominated debt. Okay? And this is a problem. You will see this later in the article. Let me continue. The new rules include stricter oversight of, developers' access to foreign, forgot where I was for a second. If the financial system is judged to be on the brink of instability, the State Administration of Foreign Exchange, or SAFE, will declare the situation, quote, abnormal. Under that assessment level, banks will be evaluated on the amount of yuan wired offshore and the volume of foreign currency sold. So this is a common tactic Chinese banks lately to try to prevent the yuan from rapidly devaluing. They were attempting to, only in the last couple weeks, there were stories out about this, sell forward dollar swaps. to try to short the dollar and shore up the RMB, the onshore banks and offshore banks. There was a story about this that Kyle Bass put on his Twitter that I've talked about. It's in the Wall Street from Main Street Facebook group in just the last couple weeks. Again, the gold community does not want to hear the stuff because it does not fit the narrative. I am telling you the truth. I am providing sources. I am not a China basher. I'm providing you solid information that the gold community it doesn't fit their narrative. It doesn't fit dollar collapse, China good, because China has gold. Does not fit that narrative. The real world is a lot more complex than that simple black and white narrative, cookie cutter narrative. So if the levels stray too far from the national average, the bank's grade will diminish. Such lenders will then face limits on banking activities. So China is trying to stop the amount of dollar-denominated debt that the real estate companies borrow. And I would say my analysis here, those Chinese private companies and Chinese real estate developers have already borrowed way too much dollar-denominated debt. We'll talk about that later in the article. China is tolerating the softer yuan to ease the impact on domestic exporters during the prolonged U.S. trade war, but the government looks to avoid a repeat of 2015 when currency traders dumped the yuan after authorities lowered the reference rate. In the wake of that currency shock, the foreign exchange regulator took steps in 2016 and 2017 to slow the outflow of funds. At the time, foreign nationals encountered hurdles when trying to transfer sums as small as a few $1,000s. Those heavy-handed tactics drew international criticism, so this time, state officials have shifted to less direct capital controls. And I would argue that they're more draconian because this is how a lot of more affluent Chinese families have been getting their savings out of RMB and out of the country for many years, according to the number of sources I've spoken to inside China. However, the currency regulator has yet to reveal the criteria it uses to determine when the financial situation is abnormal. There remains the potential that overseas fund transfers could be disrupted on the agency's whims. SAFE has also ordered lenders to request extra documentation before signing off on offshore remittances. So the serious part here, they want proof of why the money is being taken out of the country. They want more documentation. They want to track everything. In the past, one of the easiest ways and if you have friends or family in mainland China, you will hear this confirmed. One of the easiest ways to get currency and savings out of mainland China was to have a child studying abroad, like a college kid, and if the kid went to Thailand, if the kid went to the United States, if the kid went to Canada, if the kid went to Australia, if the kid went to London, then the kid would get like a debit card and they would be able to take out 50,000 per day. That would be allowed. Or the kid would be able to buy some real estate. That has happened many, many times, countless times, probably millions of times. Okay, continuing. I'll take a look at the live chats later. So if you're giving me a super chat, thank you very much. I'll take a look at it later. Let me finish the article. Let me stay on topic here. The RMB today is, again, continuing to devalue very, very rapidly. Its offshore conversion is 7.156 yuan to the dollar. And the chart on macro, I remember I did a short video only a few days ago. The chart on macro trends, the 6-month and 1-year chart is really crazy of the exchange rate. So the Chinese government is losing control of the exchange rate. Either they're letting it go or they don't have the reserves or the dollars to defend the exchange rate like they wanted to. Letting the exchange rate fall this fast is not normally how China does their policy with their dollar peg and their currency controls. Okay, so back to the article. Okay, SAFE has also ordered lenders to request extra documentation before signing off on offshore remittances. That's important. If a parent wishes to pay school expenses for a student studying abroad, an acceptance letter must be presented. To transfer money for other reasons, documents such as a work permit must also be furnished. So these were not required in the past. They want a paper trail to track. They want a paper trail to track and check to see if taxes were paid on that. Quote, wiring money overseas is not allowed for the purposes of purchasing real estate or insurance products, end quote, said a representative at a second-tier Chinese bank. So it seems that things are getting more strict. China is becoming more desperate. China is imposing newer, more strict capital controls on currency outflows, net capital outflows. Real estate okay, here we go. Here's another important part. Real estate companies face tougher restrictions. The National Development and Reform Commission told companies in the sector that debt instruments denominated in foreign currencies, meaning dollar-denominated debt mostly, or European or euro-denominated debt, are limited to those with maturities up to 1 year. Even then, procurement of those funds can only be applied to refinancing. So they don't want any new dollar-denominated debt. They just said they only want refinancing. And they want shorter duration dollar-denominated debt. But you will see in a second, this problem is already massive. Between 2013 and 2015, when the yuan was trending strong, Chinese real estate developers floated a copious amount of dollar-denominated debt. The borrowers failed to draw down the liabilities to a meaningful extent, and the balance stood at 170 billion in July, according to one estimate. I can tell you that that estimate is extremely low. I interviewed a number of months ago, about two and a half months ago, maybe 3 months ago, Emma Molman. She works for hedge funds. She gets paid to research global macro stuff every day, Monday through Friday, for many, many hours. She does this research. The same stuff I'm doing to you guys for free, she gets paid the big bucks to do. And she was saying on that interview, and I will attach a link to it at the end, the link to that interview, if you have not listened to it yet, or you want to re-listen to it at the end of this video after it's over, she said straight up that China has around $1.4 trillion in dollar-denominated debt due in the next 12 months, not 170 billion according to that estimate. So that estimate is very low. The real number is almost 10 times the amount of dollar-denominated debt. And guess what? Over the next couple years, the amount of dollar-denominated debt that Chinese real estate companies, Chinese private sector companies, Chinese state-owned enterprises, Chinese banks owe, the dollar-denominated debt is much higher than the 170 billion number. That number is an extremely low estimate. We're talking real numbers of dollar-denominated debt, at least 3 trillion. I read articles about this in the last month or two. There's articles about this from the South China Morning Post and elsewhere over the last year or two, that China has a 3 trillion at least minimum dollar-denominated debt problem. And a lot of that trillions of dollars in dollar-denominated debt is coming due in just the next couple years. And if you want perspective, if you want to look at exactly how much relative that dollar-denominated debt is, it's a problem. If that $1.4 trillion estimate of dollar-denominated debt coming due in the next 12 months is accurate, that is more money than China has in U.S. treasuries. That is a large chunk of the supposed reserves, trade surplus that China has in dollars. That would take up a lot. Okay, I'm not China bashing. I'm reporting accurate information and facts and analysis here. Not China bashing. I routinely criticize the U.S. government and the European Union and other governments in emerging markets as well. But no one in the gold community is going to give you this information. Absolutely no one. I've seen no mention of it at all. In fact, I'll probably get nasty emails and Facebook comments and more people from who repeat verbatim whatever Peter Schiff says will send nasty things to me, making really ridiculous accusations. I just want everyone here to have a more balanced view of the global economy. That all these governments, all these economies are a disaster. Okay, continuing with the article here. So, this article says 170 billion of dollar-denominated debt the balance is, according to one estimate. In the next 12 months, it is, according to my hedge fund contacts and other people I have spoken to, it is completely and totally wrong. An increasingly softer yuan will drive up the burden of paying back the debt. On the other hand, the procurement of dollars can potentially prop up the yuan, at least temporarily. Chinese real estate companies, however, are often assigned low credit ratings, which raises borrowing rates to around 10%. A higher debt pile risks causing instability in the financial markets. Also, guys, Christopher Balding, who is a China expert, he was a economics professor and a libertarian inside China in Beijing for years, and now he's an economics professor, I think, in Vietnam, and he's been talking for a long time about the amount of dollar-denominated debt that Chinese real estate companies have borrowed. And then the rest of the article just talks about the trade war and tariffs with President Trump, and the value of the yuan is projected to drop by roughly 4% during the entirety of August, the largest monthly margin since 2005 when China adopted the managed floating exchange rate. This is an inconvenient truth for the gold community. This is an inconvenient truth for the alternative media. The global economy is not as simple as China accumulates gold, the gold makes China great, and the dollar will collapse immediately, which is routinely what you hear from gold people. I've been seeing it all over social media, articles about this. When the yield curve was going inverted, it is not as simple as that. On top of this, Isabella just brought up here in the live chat section that there is still the HSBC bank rumors that China and the People's Bank of China, their central bank, may have been so desperate that they had to borrow hundreds of billions of dollars recently in loans that they may not pay back just to keep the currency from devaluing even faster, to try to stabilize the currency. Mohammed says Peter Schiff uses common sense. However, common sense does not work because commoners do not about undisclosed data like Kyle Bass. Hello, Mohammed. All that data from the Chinese economy is readily available. The problem with Peter Schiff, and Peter Schiff is a smart guy. I respect him. He knows a lot about Austrian school economics, but he is 100% wrong on China. The problem is that he is not applying the same standard of Austrian school economics to the US and the European Union that he does to China. China has centrally planned. They have misallocated trillions and trillions of dollars in a credit bubble, in a real estate bubble. And now, if you look at the data, China has a lot of debt in their economy. The debt is not only in non-financial private sector companies, it's in local government finance vehicles that set up dummy corporations that were hoping for bailouts, that knew that they can never pay back the money. And then also, household debt in China has gone up fivefold in the last 10 years. Things have changed a lot in the last 10 years. Peter Schiff's talking points, and I respect Peter Schiff, but he's wrong about this. Things have changed a lot in China in the last 10 years. Peter Schiff's talking points about China have not. And so that's why these brainwashed disciples of Peter Schiff, and this guy may or may not have been an employee at Euro Pacific Capital, repeating this nonsense to me and making really ridiculous accusations, calling me names, saying that I'm corrupt, is just ridiculous. If I would have debated this guy, this loser, I would have destroyed him in 5 minutes about China. He knows nothing. Absolutely nothing. Oh, China has great manufacturing productive capacity. China has no debt. They have so much savings. Then why are mortgages on speculative real estate on empty concrete shells? There are a lot of pretty affluent Chinese families who do have savings, but they also have a lot of mortgages on empty concrete shell properties. And the attitude in China for their real estate bubble is the exact same one in the US prior to 2007 and 2008. The exact same attitude. Same attitude in Australia too now. Okay, I'm not saying the US is a lot better. If you're interpreting it this way, you are misinterpreting what I'm saying. I'm saying China is now on the level of problems of the European Union and on the level of problems of the US. 10 years ago, China had basically no debt. A lot has changed in China in 10 years. And if you disagree with that, God be with you. Good luck. Short the dollar. Buy the riskiest gold stocks. Go buy all the stocks that are pumped on the YouTube pumper videos. All the gold junior garbage that are pumped on the YouTube pumper videos. And don't check your account at all. And just hope and pray, hopium, that you will get rich when gold goes to $10,000. If China's economy was so great, guys, how come they're putting a lot of capital controls in? This would not be necessary. They do have a dollar shortage, and it's probably going to get worse, especially if they're telling real estate companies no more dollar-denominated debt, and they're telling other private sector companies no more foreign currency debt. That means they're having problems covering it because China's not running trade surpluses with everyone anymore. Kyle Bass has documented this, and other very well-respected global macro researchers, global macro money managers, global macro newsletter writers. The gold community ignores all of this. It's truly tragic. I respect a lot of the people in the gold community. They just have a enormous blind spot about China. Okay, let me look at listener questions and comments. End of rant. Thank you for the super chat, Joseph. I appreciate it. I'm glad you like my podcast, and thank you very much to the 100, almost 150 now, Patreon account contributors. Things are really starting to grow, and that's because I'm providing information and education that is not really available for free anywhere else on the internet. It's not available for free. Normally, this stuff is behind a paywall on Real Vision TV. It's behind a paywall on Hedgeye. The dollar index did break 99, Mohammed. However, the dollar index now, when I have it up, is back down to 98.83. So it's not at 99. It matters where it closes. Just like the dollar index has struggled to close above 98 consistently for basically over a year. Isabella asked, does China throw HSBC Bank out of China because of Huawei or not? Isabella, there are so many rumors. There's at least 4 or 5 very interesting rumors where there's at least some circumstantial evidence floating around about HSBC Bank that the rumors may have some validity to them, and it's tough to know which ones are true and which ones are not. Some of the rumors totally contradict themselves, and we may have multiple of these rumors that may contradict themselves end up being true in all or part. So it's still very unclear. The mainstream financial media, the gold community, has decided not to report them. If the gold community does report them, they're saying bullshit about which I've heard none of these rumors outside of the gold community making them up about how this is all about GLD. Mohammed, if Peter Schiff was applying sound Austrian school economics principles, which are warning people about rapidly growing credit bubbles with misallocations of resources and economic central planning on a never-before-seen scale, Peter Schiff would objectively say that China has problems now. I'm almost to 5 million views, guys. This has been blood, sweat, and tears for a long time. The growth rate on my channel it's turned around unbelievably in the last 3 or 4 months. Santana says, I'm probably the hardest working guru on YouTube. I don't consider myself a guru. I just try to be the best analyst I can be. And I will admit when I'm wrong. So if there is evidence that JP Morgan, if it's disclosed that JP Morgan has 300 million ounces of physical silver, if you find me documentation buried in their annual reports or somewhere else, I will admit I'm wrong. If you find me the documentation, I will admit I'm wrong. And you know what? Most of the people in the gold community won't do that. I will admit when I'm wrong. I'm still learning. I'm still trying to get better. People are just ridiculous. Not everyone, but some people are just ridiculous. I cannot believe this guy, I made the mistake of rationally trying to argue with this guy about his Peter Schiff China talking points. I tried to say, what are you talking about with productive manufacturing capacity? There's all these stories coming out in the last 3 or 4 years about Chinese manufacturers who are getting paid just to produce goods that are either rot, they sit in inventory, they sit in warehouses, or these manufacturers are they're running the factory with a bare bone skill, or they're getting bailed out in certain areas like Guangzhou. There's been articles, guys, about counterfeit gold bars for years. What was it, like tungsten, like like 8 or 9 years ago, there's been articles about fake gold bars for years. And here's another thing, guys, the gold community won't talk about. China is the Roach Motel of the gold market. Okay? So when physical gold bullion goes into China, it is not allowed to leave. I have a number of sources, including people that listen to this podcast from inside China, foreigners who are doing business in China and are debating leaving in the next 12 months or less because things are getting a lot worse in mainland China to foreigners that want to get their gold out and can't. I've heard that from multiple people. And I was told by my top China source that it is illegal to remove gold bullion from mainland China. And China is tracking, according to what I've heard, the Chinese government is tracking all purchases of physical gold bullion inside China by private sector people. You have to buy it with a credit card, so there's a paper trail with the social credit score so they can track you down. If you have many kilogram bars of gold and things get worse in China, the Chinese government may try to confiscate that gold. I'm not saying they will, I'm saying they may. Thank you, TL, for the super chat. I appreciate it. I'm attempting to be fair. Unlike most people in the gold community, I do not repeat things for... Look, I used to be a China bull. I've said this a lot. 10 years ago, I used to be a China bull. They didn't have much debt, and I did not know about the accounting fraud in China, and I've learned hard lessons. I invested in a small cap company, and I got fooled. This was 2009 or 10. I was a victim of the China hustle. I only lost a couple $100. But I know people who've lost a lot more than that. Some people gambled on some of these Chinese stocks like Sino Forest and others, and they went all in on a couple Chinese stocks, small caps, here on the US in the reverse merger scams that were featured in the China Hustle documentary, and they lost their whole life savings. Okay, I used to be a China bull, and now I have had a more balanced analysis of things. The current event stories are there. That there are problems in China. Okay, do you think China would really let the exchange rate against the dollar, their currency, the yuan, do you think they would let it devalue their currency this fast if they had more dollar reserves? I don't think they would. I really don't think that the Chinese government would, and the People's Bank of China would allow the exchange rate to rapidly depreciate against the dollar this fast if they had the reserves that they claim. That's my humble opinion. I think the evidence is there that there is a dollar shortage. Otherwise, China would not have ordered that no more new dollar-denominated debt. This is an excellent question by David. What is the end game? The end game is something will collapse. Something will collapse, or there will be a new system or a system reset. And I don't know if anyone knows exactly how that looks like. So the question then, and this is what the hedge fund traders and the investment bankers and the private equity guys are doing, and the global macro traders, the professional money managers are doing, they are betting on what collapses first. Will the European Union and European banks collapse first? Will emerging markets collapse first? Will China collapse first? Will the US collapse first? Will Japan collapse first? That is what a lot of the professional money managers are doing. They're setting up their trades accordingly. And if you look at price action, they are betting the US will not collapse first, because that is why so much money is going into the US Treasury market. And I've read articles and comments from gold community saying because the yield curve is inverting and so much money is going into the US Treasury market, and that means that the US will collapse first. It doesn't look that way. It looks like the US, at least for a shorter amount of time, is going to be able to get away with larger treasury bond auctions. However, in the long term, that means the US is being given more rope to hang itself with. Tomcat asks, what happens if everyone collapses at the same time? It's a good question. Then there may be what I think the Davos crowd wants a digital cryptocurrency. They want to track and they want to go cashless society, ban cash, and they want to track and tax every transaction. And then if a podcast like mine is a rabble rouser and I criticize governments routinely, criticize banks routinely, then they could just basically put a tax on me for speaking my opinion, or they could just shut off my bank accounts, shut off my credit card, shut off my debit cards, and then I'm done and I can't buy food. I'm basically dead then. And that's why I'm trying to get money coming in, guys, from different places with my Patreon and elsewhere. Because I've worked my ass off the last 3 or 4 months to provide you guys with some of the best content and information for free anywhere. The best analysis I possibly can. Arguably hedge fund level. I would say it is hedge fund level because Real Vision TV wants me to do on TV camera work for them now. But there's the realistic possibility that all my hard work in 6 months from now or coming up for the 2020 election, if I make 1 wrong video or 2 wrong videos, all my ad revenues, which I worked very hard to do a complete 180 on and turn my life around financially in the last 3 or 4 months, and all my hard work goes down the drain and I'm totally cut off from everything. And then it's back to zero. So, the bottom line, there's a lot of evidence. I've been covering this for the last 8 months, probably over a year, about China. And a lot of people don't want to hear this. I routinely criticize the US. I routinely criticize problems in the European Union. But the people who say I'm a China basher, they're brainwashed. They don't want to hear that I criticize all these governments. I'm tired of repeating myself with that I criticize all these guys. All these governments. No government's doing a good job right now. The larger the government, the larger the economy, the worse job these governments are doing. Robert Lee says cashless system will create a huge black market. Yeah, unless the government actually grows in size and guns are banned, and then you're a criminal and you're risking getting thrown in prison or executed. It depends how much resources this large totalitarian government would have to enforce anyone trying to go in the black market. Because if the government is still around and it's large and it has a lot of weapons and resources, you're risking your life then. So then every country is looking like China is now with the social credit score system and the millions of cameras, surveillance cameras. And then it's looking like our poor friends in Hong Kong who are fighting for free speech. 2 new protesters, two of the leaders of the protesters, Joshua Wong, and I forgot the other person's name. I'll apologize, I don't remember her name. They were just put in prison for the protests. And it looks like the People's Liberation Army, the Chinese military, is about to march in. The rumors are in less than 24 hours. Could be as early as the next 12 hours. Little John, you got it, brother. You got it, buddy. I think you're right. Schiff is a China pumper because he probably owns a lot of stocks in Chinese companies. Euro Pacific Capital has a China stock mutual fund, and he routinely puts customer money into Chinese companies. At least he used to have a China stock mutual fund. He owns a lot of foreign company stocks. I don't trust... Look, there's a lot of Chinese companies that fooled some of the best research analysts and auditors. Yaden says 1984 is coming. 1984 is no longer fiction. And I just saw another article about, in the last couple days, about how Silicon Valley here in the US is starting to implement, they're planning on rolling out in the next few years, probably around the 2020 election, maybe afterwards, their own version of a social credit score system. So the large big tech social media companies will be rolling out in the next few years their own version of the Chinese social credit score system. Which means that people like me are in a lot of trouble. I don't know. I honestly don't know, guys and gals, how anyone can trust any government at this point. I'm not a big fan of Trump, but I think he is causing a lot of pain in China with the tariffs, and China was already having problems before the tariffs, but the tariffs have been exacerbating and accelerating the problems in China with their current account deficit and their dollar shortage. Yeah, Isabella, here's the thing. I have not seen any, you say about Basel III Tier 1 gold that is raised to increasing value for Basel III Tier 1. I have not seen any evidence. Maybe you guys can email me stories on this. I have not seen any evidence that private banks in the US or European Union are buying, or England, the United Kingdom, are buying physical gold. So show me evidence that Goldman Sachs or JP Morgan or some of these other, or Bank of America or Wells Fargo or Barclays are buying 50 tons of physical gold, 10 tons per month, something like that. Show me evidence of that. Because the only evidence I have heard for years from contacts in Swiss refiners and elsewhere is that these private banks, these large private banks, have been enormous net sellers of physical gold and physical silver. They have sold allocated customer gold and silver for years and been fined. So there were IOUs and other hypothecated silver there, and they've gotten fined. Morgan Stanley got in trouble for this and was fined a number of years ago. And I've heard from refiners also that these private banks, for the last decade at least, have been selling massive, whatever older government sovereign coins and bars were in their vaults for gold and silver have been sold. So the vaults of these private banks have been totally emptied. That's what I've heard. And that's how they found some of these fake bars. Vajra, I don't know if that indicates that means that JP Morgan has bought gold recently. I think it's more likely that one of the customers at JP Morgan asked for their physical gold redemption and is taking the gold out of the banking system, or JP Morgan was attempting to sell more physical gold for cash. And then JP Morgan, when they tried to smelt it or get the bars assayed, they found out that the bars weren't of value. So JP Morgan probably was trying to sell the gold or give it to a customer. That would be my educated guess. I have seen no evidence. I will change, unlike other people in the gold community or alternative media, I will change my mind if you present me with information and facts. Almost all the people that yell at me and scream at me and call me names, they have none of those things. Absolutely none of those things. Look, if you accuse me of having no ethics, no integrity, of taking first of all, I've never spoken directly to Kyle Bass. I've only gotten information secondhand or third hand from him. I would love to interview him. If I interview him, the interview will be up here in my channel. I think he's one of the smartest people in finance. He's not always right, and for some of his trades, he has challenged governments and been wrong, but I'm not taking a penny from Kyle Bass. I would be a lot better off financially if someone was paying me, but I'm doing the best I can. No one is paying me any of that stuff. I've had to really hustle the last 3 or 4 months to try to turn my life around financially. Things were very, very dire 3 or 4 months ago. Thankfully, things are much better now. This is an interesting comment. Samajas has said, Samajdis, I'd say that there is more gold in people's dental fillings in London than in the vaults there, judging by the latest PR visit Queen Elizabeth did. So you may be right about that, but there's been a lot of export data showing that there's a lot of gold been leaving from London vaults for the last 8 to 10 years. So we don't know the exact number of gold in London vaults, but the export data out of London shows that a lot of gold has left the country. And most likely that gold is either, most likely it's going to Swiss refiners to be turned into 4/9 kilo bars, so recast as higher purity gold bars, kilo bars. I don't day trade stocks. If I were, this is just hypothetical. This is not financial advice. If I was managing money based on all the data coming out of China, I would be very bearish on oil. I'd be very bearish on copper. I'd be very bearish on iron ore and steel. I'd be very bearish on other base metals. I think China will buy food. They will buy as much food as they need to try to prevent another 1989 uprising. Food prices are getting basically out of control in China, and a lot of people inside mainland China are very, very worried about their savings now with how quickly the yuan is devaluing against the dollar. I've heard from multiple sources there's a lot of people who want to get their savings out of China, and the capital controls that I just read the story for you guys today is going to make their lives immensely more difficult. You will not hear this information in the gold community. You will not hear a lot of this information in the alternative media. You will hear this information if you're a Hedgeye subscriber, because Darius Dale put it on his Twitter, and I'm sure he's doing an update about this. He just said, if you're just catching the show now, first of all, hit the like button, please, if you haven't already done so. But Darius Dale, who's a hedge fund manager and a global macro researcher, he gets paid a lot of money to do this at Hedgeye. He just put on his Twitter earlier today, this is the first thing I've read that says Beijing is officially panicking. And then he attached the link to the Nikkei Asian Review story I read for you guys earlier in the show from today, about the increasing, more draconian capital controls going after the normal way that more affluent Chinese families get money out of the country. And the more affluent, what happens normally with how, I don't remember if I explained this earlier, and I'll wrap the show up with this because my voice is starting to go. I wasn't planning on doing the show. I was planning on doing another show for you guys. But, when there's breaking news, I do it. That's just what I do. So, the normal way a lot of more affluent Chinese families get money out of the country is if they have an adult son or daughter who's a college student, if the kid's going to university in London or Thailand, Canada, Australia, or the US, the kid is given a debit card, and then they were withdrawing sometimes $50,000 per day. $50,000 worth of currency per day, taking it out of China. There were ways around this, around the capital controls. Or the kid would be wired money or given some other type of way to go buy a house or real estate to get money out. And this has been going on, guys, for well over a decade. This is why in where I'm from initially, not where I was born, but where I lived most of my life, was in Orange County, California. This is why there are a lot of Chinese real estate owners in Orange County, because a lot of Chinese money is parked there. Same thing with Vancouver. Boracan says there's no food shortage in China. Well, according to China's own data from the National Bureau of Statistics, the food prices are up. Some of the pork prices are up 40% in just the last. They were up 40% officially in the last year, and the average food price increase was 9% in the last 12 months. That to me sounds like problems. On top of that, you have the African swine flu, and you have the army ringworm, and then you have the bird flu. The army ringworm was killing the grain crops, especially in the southern area for rice and other grain crops in China. And also I hear the army ringworm has spread to Thailand and I think also Japan now. And I think the swine flu, the African swine flu, may have also spread to Japan too. Hello, Albert. I think according to my source in mainland China, a lot of people in China use pork lard and they put it in vegetarian vegetable dishes. So pork fat is used to cook in the wok a lot of dishes. Yes. Ryan asks a good question. Does our currency devaluation have an effect on food prices? Yes. And the Chinese government also was subsidizing for quite a while, probably the last 6 to 8 months, they were subsidizing pork prices. So the average person in China did not have to deal with higher pork prices. And from what I've heard recently, just in the last couple weeks, the pork subsidies on pork prices have stopped. Coquito says, no wonder the kids in my college drove 100,000 plus cars. Yes, there was a lot of money taken out, and there's documentaries about this, about the Vancouver housing market, about spoiled Chinese kids in their 20s, in their teens and 20s, who have all this currency They have all this money and they open up their own businesses, like a fashion shop in Vancouver. They're buying multiple houses, sight unseen sometimes, and they're empty, so they're buying them just for spec. There's an empty house tax in Vancouver. There's documentaries out about this. There's been, guys, the evidence is overwhelming. I've spoken to many, many people all over the globe about this. There's a lot of Chinese money that has come out of China in the last couple decades, and it's gone into real estate in Australia, real estate in the US, all over the US, real estate in London, real estate in Vancouver, elsewhere. There's been a lot of Chinese money that has come out of China. Some of it was honest, hardworking money in people's savings. Other amounts of Chinese money was literally straight up stolen. If you've seen the Miles Kwok interview that was just released, that was recorded in November on Real Vision TV, that interview is now free. It is old though. It was recorded in November. I've been talking about that since it came out. I did not think that they would release it for free, but they have like hundreds of thousands of views on it in only a few days. Go and watch that interview. And he talks about how the elites in the Chinese government are plundering the People's Bank of China and stealing billions of dollars extra for themselves, laundering it out of the country and buying real estate all over the globe. And this is what has driven up housing prices. It's not just the Federal Reserve. It's not just all these other central banks. A lot of the housing bubble and the reason that a lot of people in my generation cannot afford houses is Chinese money has come out of China. It's been either stolen or laundered out, and it's been used to buy real estate, and that's why people in my generation cannot afford one of the major reasons why people in my generation cannot afford a house. Even if we have a good job, even if we have good credit, even if we can put a 20% down payment down, because we're bidding against an ungodly amount of Chinese money. Okay, guys, well, my voice is going. I've been going here for almost 50 minutes. Please hit a like. If you don't have money for a super chat tip, you don't have money for a one-time PayPal donation, that's fine on my website. If you can't become one of the almost 150 Patreon account contributors, that's fine. Just please put a like button. Hit the like button. I appreciate it if you found this content valuable. Bottom line, there is a mess in China. There's a mess all over the globe in the European Union. I've highlighted this at length in the United States. And the Chinese spill over into causing real estate bubbles in Canada, Australia, and also reflating real estate bubbles in the US and making the younger generation that even has good jobs, making it difficult to buy a house. A lot of it is because it's not just central banks. You can't blame the Federal Reserve for all the problems in society. A lot of it also, especially with the higher real estate prices, has to do with China. Okay, guys, bye for now. I'm going to go relax. And I may jump online for another video later tonight. We'll see.